Hey everyone, ready to dive into a side of Warren Buffett you might not expect.
Yeah.
Today, we're going to explore how insurance
Oh, yeah.
became like the secret ingredient in that Berkshire Hathaway recipe for success.
Hmm.
We're going to be looking at The Warren Buffett Way by Robert G. Hagstrom.
Okay.
And I got to say, the insights are really interesting. We're talking about a guy who took a struggling textile company
Right.
and turned it into this financial empire.
Yeah.
And it's all because of insurance, which you wouldn't normally think of.
It's fascinating how much focus there is on the stock picks when the real driver behind it all
Right.
is this thing that's often overlooked.
Yeah.
It's all about insurance. And it all starts with this challenge that Buffett had to face in the early days.
Okay, so set the scene for us. What's going on?
So picture it, early days of Berkshire Hathaway
Mm-hmm.
and the textile business,
Right.
which was his initial acquisition.
Right.
It's having trouble generating the kind of capital he needs to do
Yeah.
those big investments that he wants to do.
Mm-hmm. Okay.
He's got this incredible knack for picking winners,
Yeah.
but he needs money to place those bets.
So he's got the smarts, but not the cash.
That's exactly where insurance comes in.
Yeah.
It wasn't just random. It was very much calculated to solve a problem.
Okay.
And it all comes down to this idea of float.
Okay.
Imagine you're running an insurance company. You get those premiums up front from policyholders,
Mm-hmm.
but you don't have to pay out claims until later,
Right.
sometimes years later.
I see where you're going with this.
Yeah.
That time gap creates this pool of money, the float, that
Yeah.
the insurance companies can invest while they wait.
Exactly. And who better to manage that money than
Warren Buffett,
Warren Buffett?
of course. So
Yeah.
insurance becomes this giant cash machine
Yeah.
to fuel these other investments. It's like a bank
That's a great way to put it.
built right in,
Yeah.
constantly supplying him with money.
And one of the first big moves in this whole insurance game
Uh.
was when he bought National Indemnity and National Fire and Marine back in 1967.
67.
This wasn't just like dipping a toe in the water.
Right.
This was the beginning of something huge.
So he's officially in the insurance business.
Yeah.
But the thing that really put him on the map is GEICO.
Absolutely.
Right.
Remember that image of young, ambitious Buffett?
Mm-hmm.
Picture him showing up at GEICO's office on a Saturday,
Wow.
spending hours just absorbing knowledge from this GEICO investment officer.
So about dedication.
It shows his commitment to learning a business inside and out,
Yeah.
even on a weekend.
Wow. But what was it about GEICO that got him so interested?
So GEICO was a disruptor before disruptor was even a word.
Okay.
They had this radical idea
Yeah.
to go after good drivers
Okay.
and sell directly to customers.
Cut out the middleman.
Cut out the middleman and keep costs low. Think about how innovative that was back then.
So they were like that cool new startup,
Yeah.
but for insurance.
Exactly.
Yeah.
But even the best companies can hit a rough patch. And in the 70s,
Uh-oh.
GEICO almost went bankrupt.
Oh, wow.
Most investors would run for the hills, but not Buffett.
This is classic Buffett, though, right? Everyone else is panicking, and he's like, time to buy.
Yeah.
What did he see that other people missed?
He was looking at the fundamentals of the business.
Okay.
He believed in their long-term potential.
Okay.
He saw a company with good bones just going through a tough time.
So he buys a bunch of GEICO stock when it's on sale, basically.
Pretty much.
And then what happens?
GEICO recovers, proving Buffett right.
Yeah.
And it turns into this cash machine.
Yeah.
But it wasn't just luck. They had a secret weapon, customer retention.
Oh, interesting.
People held on to their GEICO policies year after year, especially the ones with good driving records.
Smart.
They had competitive prices, and they had great customer service.
That's a great point. It's not just about getting new customers.
Right.
It's about keeping the ones you have happy and
Right.
coming back for more.
And that's a lesson we can all learn,
Yeah, for sure.
whether it's in business or our personal lives.
Totally.
Build relationships that last.
Yeah. By 1996, Berkshire fully acquired GEICO, and it became a cornerstone of this insurance empire.
Yeah.
But Buffett wasn't done. He was looking at an even bigger prize,
Oh, yeah.
reinsurance.
Reinsurance.
Which is where you insure other insurance companies.
That's right.
That's where Gen Re comes into the picture. Okay, reinsurance sounds complicated,
It can be.
but I have a feeling it's going to be interesting.
Yeah.
Give us the inside scoop. What was so special about Gen Re?
Well, think about it this way. Reinsurance lets those primary insurers
Mm-hmm.
take on more risk because they know they have a safety net.
Okay.
And for Buffett, it was a chance to play in a bigger game,
Higher stakes.
higher stakes with potentially bigger rewards.
It's like he's leveling up
Yeah.
in the insurance world.
He's moving up.
Right.
Yeah.
From regular policies to now entire insurance companies.
Exactly.
But this Gen Re deal wasn't just about buying another company.
You're right. It was strategic in a few ways.
Okay.
One of the brilliant things about it was that Buffett used Berkshire stock
Okay.
to acquire Gen Re's bond portfolio,
Interesting.
which had a much higher yield than the bonds that Berkshire owned at the time.
Oh, wow. So he's getting into reinsurance and
Yeah.
upgrading his bond portfolio at the same time.
Kind of like a double win.
A double win. But I have a feeling this story has some twists and turns
Oh, yeah.
coming up. We'll have to dig into that next time. We're back. And before the break, we were talking about General Re,
Yeah.
Buffett's big jump into reinsuring other insurance companies.
Mm-hmm.
But it sounds like it wasn't all smooth sailing, was it?
Not exactly. Gen Re came with its own set of challenges.
You know, it's kind of refreshing to hear that even Buffett can face setbacks. Makes him a little more human, right?
Right.
So what kind of hurdles did Gen Re face after the acquisition?
Well, they had a few things,
Okay.
like underpriced policies and unexpected losses from natural disasters.
Oh, wow.
They even insured some Hollywood movies that totally flopped.
Wait, hold on. Movie flops? That's a thing in reinsurance.
You'd be surprised the kind of risks these companies take on.
Okay, so movie mishaps aside, what were some of the bigger issues that Gen Re had?
Right.
The book mentions cost to float,
Yeah.
which sounds important.
Cost of float is a big deal in the insurance biz.
Okay.
It's basically the ratio of underwriting losses to premiums.
Okay, so if an insurance company prices its policies too low,
Right.
or they get hit with way more claims than they expected,
Yeah.
that cost to float goes up and eats into their profits.
Exactly. That's why underwriting discipline is so important.
Mm-hmm.
It's about assessing risk carefully,
Right.
pricing policies, right?
Yeah.
And not taking on too much risk just to grow the business.
So it's about finding that sweet spot
Yeah.
between growing the float but not doing it at the expense of profit.
Exactly. And that's kind of where Gen Re stumbled.
Okay.
They had some underwriting problems that led to bigger losses than expected,
Yeah.
and that drove up their cost of float, which hurt their profitability.
And then, of course, there was 9/11,
Right.
which obviously had a huge impact on the whole insurance industry.
Absolutely. It was a tragic event,
Yeah.
and it really exposed some vulnerabilities
Right.
in how the industry was assessing risk.
Mm-hmm.
Gen Re, like a lot of other insurers, had a lot of exposure
Right.
to the World Trade Center,
Yeah.
and they suffered some pretty big losses.
It's a reminder that assessing and managing risk in an uncertain world
Yeah,
is incredibly important.
it really is.
It's interesting that Buffett was so open about admitting
Mhm.
that he didn't fully understand the extent of Gen Re's problems
Right.
before he bought the company.
He even called it a mistake.
But what's remarkable is that he didn't panic and sell it off.
That's right.
He doubled down on fixing it.
He did.
It shows his long-term vision and
Yeah.
his belief in that reinsurance business.
It does. He saw the problems as temporary.
Yeah.
And he focused on finding the right people and strategy
Yeah.
to turn things around.
It's a good lesson for any investor, really.
Yeah.
Don't be afraid to admit mistakes
Right.
and don't give up on a good business
Yeah.
just because it's facing some temporary challenges.
Sometimes the best investments are the ones
Yeah.
that need a little patience
Mm-hmm.
and a willingness to work through the tough times.
Absolutely. So we've got GEICO, this innovative direct-to-consumer company. Then we've got Gen Re,
Yeah.
this reinsurance giant. But there's another piece of the puzzle we need to talk about.
Right.
The Berkshire Hathaway Reinsurance Group.
Yeah.
This one sounds really interesting.
Oh, it is. They deal with some pretty unique risks.
Oh, like what kind of risks are we talking
I'm
about?
talking about things like insuring athletes against career-ending injuries,
Wow.
providing coverage for internet lotteries,
Okay.
even insuring against major events like earthquakes and hurricanes.
It's like they're the venture capitalists of the insurance world,
That's a great way to put it.
looking for those opportunities where the potential reward outweighs the risk.
They're not just gambling, though.
Right.
They're making calculated bets based on their expertise
Okay.
and a deep understanding of the probabilities involved.
And of course, they have the financial back-end of Berkshire Hathaway,
Absolutely.
which lets them take on these kinds of risks that other companies just can't.
That financial strength is huge.
Yeah.
It gives them the confidence to write policies that others wouldn't touch,
Right.
and it makes them a really reliable partner for their clients.
So we have this whole portfolio of insurance businesses businesses,
Yeah.
each with their own specialty and risk
It's
profile.
like a well-balanced ecosystem
Yeah,
working together to generate this massive stream of float
right.
that Buffett can then use for his investments.
And it's all tied together by Buffett's insurance philosophy,
Right.
which is that insurance is a commodity business,
Mhm.
and he builds a sustainable franchise through financial strength and underwriting discipline.
He avoids those price wars. And he focuses on writing a lot of insurance,
Yeah.
but only at prices that are profitable.
So what does he mean by insurance is a commodity business?
Think of it like buying milk.
Okay.
There's lots of brands,
Right.
but at the end of the day, it's still milk.
Yeah.
With insurance, you're selling a promise
Right.
to pay out if something bad happens.
Okay.
There's a lot of companies offering similar products,
Yeah.
so you have to stand out based on price and reliability.
So how does Buffett avoid getting sucked into those price wars?
He's really disciplined.
Yeah.
He knows that chasing market share
Yeah.
by undercutting competitors on price
Yeah.
is a recipe for disaster.
Okay.
It can lead to writing policies that lose money and
Yeah.
hurt the business in the long run.
So it's all about playing the long game,
Exactly.
focusing on sustainable profits instead of trying to make a quick buck.
That long-term focus is really a hallmark of his whole investment philosophy.
Yeah.
He's not looking for the next hot stock tip. He's building businesses that can generate consistent returns
For decades.
for decades.
This brings us back to that quote.
Yeah.
Our main business is insurance.
Mm-hmm.
It's not just a saying, it's a reflection of his deep understanding
Yes.
of how insurance plays into his overall success.
It's the engine that drives his whole investment machine.
Okay.
The float from his insurance businesses gives him the capital
Right.
to make those big bets on companies like Coca-Cola,
Yeah.
American Express,
Apple.
Apple. Exactly.
It's a brilliant system,
It really is.
and it's built on patience, discipline,
Mm.
and a deep understanding of risk and value.
Those are principles that any investor can learn from.
I think we've covered a lot,
We have.
from the basics of
Yeah.
insurance float to
Right.
reinsurance to managing risk.
Yeah.
But before we wrap up,
Okay.
I want to take a step back and ask a bigger question.
All right.
How does understanding this insurance empire change our perspective on Warren Buffett as an investor? Okay, so we're back and ready to tackle that big question. How does understanding this whole insurance empire change how we see Warren Buffett as an investor?
Yeah, it's like we found this hidden level in the
Mhm.
game of understanding Buffett.
Right. We see those amazing stock picks,
Yeah.
incredible returns,
Yeah.
but underneath it all is this engine running on insurance.
Yeah, it's like we've uncovered the wiring
Okay.
behind this simple machine.
So it's not just about picking the right companies, it's also about having the resources and the patience to stick with them for the long haul.
Right? And that's where that insurance float is so powerful.
Mm-hmm.
It's like this financial cushion that lets him ride out the market storms and grab those opportunities that other people can't.
Right. He's not forced to sell when the market dips because he's
Yeah.
got this constant flow of cash coming in from those insurance operations.
Exactly.
It makes me think about the average investor out there, constantly hearing all this news and seeing the market go up and down.
Mm-hmm.
It's easy to get caught up in all that and make impulsive decisions.
It's one of the biggest traps people fall into.
Yeah.
They react emotionally instead of focusing on the long-term value of the businesses they own.
Right. Buffett, on the other hand, is so calm and rational.
Yeah.
He's able to tune out all that noise and make decisions based on what something is really worth.
It's like he's playing a whole different game
Right.
while everyone else is chasing short-term gains.
Yeah.
He's building a chessboard that spans decades.
That long-term perspective is a key takeaway from all this.
It really is.
Yeah.
He's not just building businesses. He's building something that's going to last for generations.
It makes you want to rethink your own approach to investing.
Yeah, for sure.
Are we thinking long-term enough? Are we being patient? Are we making disciplined decisions?
Those are great questions to ask yourself.
Yeah.
Because what makes Buffett successful
Mm-hmm.
can apply to anyone no matter how much money they have to invest.
Right. It's about looking for value, understanding risk, and sticking to your plan even when things get crazy.
It's about ignoring the noise and focusing on the real stuff. It's about building a portfolio that matches your goals.
Right. And remembering that investing is a marathon,
It is.
not a sprint.
It's about making smart choices over time.
This has given me so much to think about.
Me too.
It's not just about understanding Buffett's insurance empire. It's about understanding his whole approach to investing. It's about learning to think like an owner, focus on the long term, and be patient and disciplined.
Those are lessons that can benefit anyone.
For sure, whether you're just starting out or you've been doing this for years.
And I think that's one of the best things about studying Buffett. He's not just an investor. He's a teacher, sharing what he knows with the world.
Well said. And on that note, I think we've come to the end of our deep dive into Warren Buffett's insurance empire.
Yeah,
It's been a great journey, and I hope you all learned something new.
me too. It's amazing how something like insurance can be so important to his success.
Right. It's a reminder that sometimes the most powerful things are the ones working quietly behind the scenes.
That's right. And for Buffett, insurance has been that quiet force driving his investments and shaping his legacy.
Before we go, I want to leave you all with one last thought.
Okay.
As you go through your day, your week, your year, remember what we talked about today. Think about how you can use patience, discipline, and long-term thinking in your own investments and in your life.
Yeah.
It's a journey worth taking.
Absolutely.
Who knows, maybe it'll lead you to your own success.
Thanks for joining us on the deep dive.
Until next time, happy investing.